Good evening and welcome to this very special edition of the Money Show. Now, getting a loan today has never been easier. Few clicks on your phone, a quick KYC check, and money can be in your bank account within minutes. From personal loans to credit cards to buy now pay later schemes and instant loan apps, credit is now available at your fingertips. But there is another side of the story. What happens when borrowers are unable to repay? What happens when an EMI is missed? Debt begins to pile up and recovery calls start coming in. Across the country, there have been growing complaints from borrowers who say they faced repeated calls, intimidation, pressure tactics, and in some cases, outright harassment by recovery agents. The RBI has clear guidelines on how lenders and recovery agents must conduct themselves. Recovery is legal, harassment is not. But this debate today or this discussion today goes beyond recovery practices. Why are more Indians finding themselves trapped in debt? That's the real question that we are asking. In rising inflation, forcing households to borrow more, is that the situation? Are easy loans and aggressive lending practices encouraging people to take on more debt than they can comfortably repay? And most importantly, if you find yourself overwhelmed by debt, what are your rights and what are your options? So today, we take a 360-degree look at India's growing debt culture, the rules governing loan recovery, consumer rights, and practical ways to regain financial control. But then, let's just understand quickly, what does the RBI actually say? The RBI allows banks and financial institutions to recover their dues, but it also lays down clear rules for recovery agents. Recovery agents cannot threaten borrowers, they cannot use abusive language, they cannot publicly shame or intimidate a borrower, they cannot engage in any form of physical or mental harassment. Borrowers who face such behavior can complain to the lender, approach the RBI grievance redressal mechanism, and in serious cases even seek police intervention. At the same time, it is equally important to remember that a loan is a financial obligation. Borrowers have rights, but they also have responsibilities. The challenge is finding the right balance between legitimate recovery and consumer protection. So, is the bigger problem aggressive recovery practices, or are we looking at much larger debt problem in India? Let's put down some perspective around this. Debt itself is not a problem. In fact, credit helps people buy homes, fund education, build businesses, meet emergency. The problem begins when debt grows faster than income. When one loan is used to repay another, when credit card dues are rolled over month after month, and when borrowers lose track of how much they actually owe. That's when debt stops being a financial tool and start becoming a financial burden. So today, a 360-degree that we are taking a look at. I have with me Jehangir Gai, Aparna, Ramachandra and Subramaniyam for this very interesting discussion. And hello, welcome both of you to this show. Aparna, let me come to you first, because are we seeing a genuine rise in financial stress among households, or are we simply witnessing the consequences of easy credit becoming widely available? We are going to talk on every aspect, but let's begin with this. Aparna.
Hi, Kavita. Thank you. It is both. There is last 3 to 4 years, the easy access to credit has obviously given rise to more reckless borrowing. However, the ticket sizes have shrunk, but the number of loans that people have taken have increased. So that's easy access to credit. And second, there is an underlying stress already because people are not able to manage these loans. Lot of these loans I don't know, because they were easy or, people were going through economic stress, multiple reasons. But today the repayment is becoming a problem. And to pay these bigger loans, people are taking loans from these smaller, small ticket app loans, only to pay the EMIs of the larger loans. So it is becoming a vicious cycle now. And I only see this growing.
PV sir, see, loan was never a wrong approach when it comes to financial planning, when it comes to financial literacy. But what are we looking at? Are we looking a very heightened aspirational India access to credit has grown faster than financial literacy. Can we say that now? Because earlier the mindset was that, you just take that much loan that you can afford. Okay, now all of a sudden we have this westernized concept of having a loan, easy access to money on almost everything. You talk about lifestyle expenses, you talk about important expenses, anything and everything. So credit is growing faster than financial literacy today?
Forget financial literacy. I think the social media pressure, for example, 50 years ago, which means 1977 ke aaspas, you had only one home loan company, just one. Can you believe it? It was only HDFC, I think 77, 78 it came. Today there must be 100. Make no mistake, 100 home loan companies. Not only that, right? The latest figures from RBI show that the amount which people are borrowing for expenses is greater than the number of people borrowing for assets like even a car and a house. You take the old-fashioned rule, it said you don't buy assets which depreciate, which means only for house you should borrow, not for a car, which depreciates 40% the minute you drive out of the showroom. So people are aspirational. People say, oh, how can I travel by train? I need a car. I mean, their income is not sufficient, but that does not stop them from buying a 1.5 lakh rupee phone or an 8 lakh rupee car when you just can't afford even the EMI. So yeah, living beyond one's means is the main cause. And obviously, with 100 companies giving home loans and 1,000 companies giving personal loans, the easy credit has increased and people don't think of it at all. They just go to their app, they tap and they get a 50,000 rupee loan. Like what Aparna said, ticket sizes have come down, but people are borrowing from more and more people. So apps are available, banks are available, NBFCs are available. They're coming to your house and giving it to you, or they're just giving it online. Access has become easier. People are living beyond their means.
Absolutely. Now, a question for the lenders also, but we'll take that in the next part of the discussion. But Rekha, coming to you, where exactly does legitimate recovery end and harassment begins now? If you could just help our viewers understand this from the RBI regulation lens as well, Rekha.
The RBI has laid down very clear guidelines as to how the money can be recovered. There is no doubt that all the financial institutions and NBFCs are there to do business. Nobody is doing charity over here. So this is a business proposition that you are giving a loan and the borrower has to return that money. He just cannot keep that money for whatever problem that he or she may be facing. Because once that loan has been taken, it has to be repaid. So it is a simple contract of lender and borrower. However, we are often seeing that the institutions, the banking institutions, are taking law in their own hands, and the Constitution of India is very, very clear about this. That every citizen of India has a right to, and therefore the banking institutions have a right to do business, enter into contracts with, lend the money, enter into contracts with the borrowers, but at the same time, the borrower also has got a constitutional right, and that is the right to live your life with dignity and respect. And that fundamental right, which is enshrined in the Constitution, the right to life, the right to dignity, and the right to probably even borrow money to do business, or to buy a car or to buy a home, that is all your legitimate right. And that cannot be flouted or taken into their own hands by the financial institutions only on the ground that the money is not being repaid. So for that, the RBI is very clear that if the money is not being repaid, if the loan is not repaid, then take recourse to legal remedies. Nobody is stopping the FIs from not, recovering the money. Recover the money, but do it in a legitimate manner through the due process of law. That is by instituting a civil suit. If there's a requirement of a civil suit, file a civil suit and recover the money. It's as simple as that. But you cannot browbeat the borrower.
But
Scared.
financial institution and the lenders are already aware of this particular legal route and help, right?
Yes, absolutely. They're absolutely aware of the fact that
this practice then?
Pardon?
Why wasn't this practice then?
Well, because nobody wants to face the reality, and the financial institutions are browbeating the customers and intimidating them. And the customers sometimes have a laid-back approach. They also feel probably too lazy to to complain to the police, or to make a complaint to the institution itself, to the bank, or to the to the banking ombudsman. A complaint can be made over there. A complaint can be made to the RBI. but probably just a laid back approach and just complain and grumble, oh, I'm being
Laid
harassed
back
by recovery
or
agents.
no trust?
No, I don't think the trust factor is the trust factor is very much there. There's no deficit or trust. I would probably say that it is your own guilt. Probably you know that you have to recover them, that you have to return the money, and instead of going to the going and complaining about it in a legitimate manner, that
Okay.
to be done in a legitimate manner. The borrower doesn't want to admit the fact that he has to return the money, that he is in debt. So therefore, to pass the buck and to get the sympathy, he probably pushes things under the carpet and just says, "Oh, the recovery agents are harassing me." Well, the recovery agents definitely don't have a right to harass you, but
Absolutely.
you also have a corresponding duty to return the money.
Right.
And therefore, to not so that the focus is diverted. Probably the borrowers don't want the focus to come on them. They don't want to be on the hot seat. It's like being on the hot seat, because once they go to the police, or once they go to the RBI or to the ombudsman, the fact is that they have to admit the fact that yes, this money is due and payable by me, and the borrower also is playing a smart game. He just wants to push things aside.
Absolutely. PV, you want to come in because I just saw that you might want to say something and add on to this.
No, typically when you don't know how we are going to borrow, you should how we are going to repay, you should not be borrowing. But that's a very high horse stand that I am taking. People just live beyond their means, and there are, I mean, forget what Rekhaji said of not going to the police. There are wives who do not know that their husbands are borrowing so much. They travel all over the place. They drive nice cars, everything. The wife doesn't even know the balance sheet of the guy, and he's just living off the credit card. And then one day the money will be due, and credit card recovery guys don't have assets to recover. They cannot take away a house or a car, so they have to be polite. And let's face it, how polite can you get when you're going for recovery? I don't think these guys have done class 101 in manners.
Aparna, so let's just also talk about the way these credits are being pushed. Aparna, who bears the greater responsibility for the debt crisis? The borrower who overborrows clearly, or the lender who aggressively pushes credit? Aparna.
Before I answer this question, I would like to add to what both of them were discussing. Now, as far as the banks are concerned, as far as the NBFCs are concerned, I'm not saying it is 100% there, but most of them have at least got 80% right. Today, you do the registered recovery agents do not call after 7:30. RBI has given very clear guidelines on this. You can call for recovery only between 10 to 7, and then you cannot be contacting the borrower's family, neighbors, colleagues, and stuff like that. But the discussion today that we are doing is largely reflective of these recovery agents from these app loans. So app loans are not governed largely by these I mean, they are somewhere leveraging a loophole, misusing a loophole where they are not being regulated. I mean, completely under the regulator's radar. So they are having their lawlessness. Having said that, most of these borrowers from these apps are also irresponsible borrowers, like Subra was saying, like Rekha ji was saying. They know what they have gotten into, but the attitude is like, can I save my today? Let me think about today just now. Can I think about my afternoon later? It is as bad as that. Okay. So now, if I have to come back to your question, whether it is the lender who's pushing or whether it is the borrower who's taking, it is a marriage made in heaven. Now there are almost 1,500 apps who have targets because they have borrowed money from their investors and they have sold the great Indian story. So they have X number of loans to disburse. Now, whether you have two legs, two limbs, but if you have a phone, you are eligible for that loan. So they are happily selling the loan. Okay. Now, at the same time, there are also borrowers who are they have no clue as to where what is going on. I now get clients where their Excel sheet is like a Udupi menu. It's like a laundry list. There are at least 25 to I mean, the top 4 or 5 will be from banks and NBFCs, and then there is a laundry list of all these apps. And you ask them that how do you plan to return? What do you plan to do? Their first reaction is, Madam, I don't know. Can you help me? And then the new buzzword is, I need debt consolidation. Bloody
Yeah.
hell, who's going to do debt consolidation? You've taken money like right, left, and center. Who will want to take over your loan when you have nothing to pay? People have salaries that are like 50,000 and their monthly outflows are like 85 to 90,000. I don't even know who in their right frame of mind gives them these loans. Also, these guys take loans like there is no tomorrow. And I'm telling you, Kavita, like I repeatedly tell on your show, this, everybody is talking about the large corporate loan defaults, big loans, but I'm telling you, mass is where the meat is. The number of retail personal loan portfolios that are just bursting out, it is scary. And I do not know where is the end to it. I mean, there can't be responsible lending, and there can't be responsible
Oh, so
borrowing.
let's focus on the responsible lending part. And Rekha, I would like you to add your inputs over here. There are a lot of unregistered app where obviously people have been asked to, users have been asked to be very mindful, when they are going for these kind of digi loans, Rekha. But responsible lender, how can one define that? How can one really do business with a responsible leader? What would be the traits of that? If someone is a borrower, definitely one needs to be mindful about their spending habits, their credit habits. But having said that, how can we ensure that there are stricter rules even for the lenders?
I think I would simply put it in this manner that, as they say, it takes two to tango.
Right.
Both of them have to be responsible. The lender has to be responsible, and the borrower also has to be responsible. But it starts with it starts with the lender. The story starts with the lender, who is as Aparna ji just said, that actually, I mean, that the way the loans are being dished out for almost for free, almost for gratis, and the kind of rosy pictures which are painted in the beginning, it is nothing but an advertisement. It is just an advertisement. And now, in the world of digitalization, it has become more and more easy to kind of make to give a very rosy picture as to how you can have a splendid lifestyle, and all these lending institutions are basically catering and pandering to your hedonistic style of living, where you want to live beyond your means. You, as Aparna ji just said, you're earning 50,000, but your outflow is more than 80 to 90,000. So all these, they are institutions are basically catering to your baser instinct of living beyond your means. And that is why everything is, as I say, that you have to read between the lines. And that is what the borrower does not do, does not read between the lines, does not, it is more easy to tap a button, just scroll and to take a loan or to sign on a dotted line, because at that time all that you can see is what is coming. So the borrower should be very, very mindful of the fact that this is that here, once I sign the dotted line, once I take a loan, the contract begins right there. And whether the borrower has painted a picture which is larger than life, whether the lender has made it very simplified, ultimately you are the one who has to face the music. You are the one who's going to be in the docs. Ultimately, there'll be a case under the Securitization Act against you. You may complain, keep on saying that the recovery agent is harassing you, blah, 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 blah. But if the loan is outstanding, the loan is outstanding. So I think that both have to be very mindful. Initially, the lender, the institutions have to meet their targets. And that is why everywhere all these advertisements are there. In housing societies, every second day, there's some camp, where they paint a rosy picture that here you take this money, buy a car, buy a house, do this, do that, send your children abroad. But ultimately, you have to pay it. So I think forget about the fact that whether the lender is doing its duty or not. I think more that the duty, the ball is in the court of the borrower, who has to realize that once I am in debt, there is no going back, and ultimately the court is, as I said, the law is going to catch up with you, and you have to be answerable to the court as to when and how you're going to pay the money.
Absolutely. One last question, and then we'll wrap up the discussion also. Pibi, I'll come to you. Debt consolidators, debt consultants, that's the new buzzword, as Aparna also highlighted. How helpful are these services?
See, I'll tell you, there are good debt, like if you've taken a loan for studying, something like a good debt, you can say, okay, instead of repaying after 3 years, I'll repay after 4 or 5 years. Somebody can play a role there and say this should be done. But taking Aparna's example, 50,000 rupee salaried guy with an 80,000 rupee outflow, let me add some more to it. His wife has something like 3-4 lakhs lying in the savings bank account, but she doesn't know that the husband is here gasping for breath. They don't even know. They don't even talk money. So with all this, what can a debt consolidator do? He says, oh, tell your wife. He says, nahi, nahi, wo to bhag jayegi. Aaj hi divorce ho jayega. We have had past problems. So, I mean, there's nothing a debt consolidator can do except in a very good case. And such a guy perhaps doesn't even need a debt consolidator. So what can a debt consolidator do? I think they have huge limitations. They can help those people who are willing to make some changes. You tell a guy, look, you have so much of debt, give up your car, travel by train, oh, bahut garmi hai, and stuff like that. You really can't help such people. So, I mean, I'm not saying debt consolidator can't do anything, but the patient is an 80-year-old cancer patient. You can remove the cancer, right? That's the best you can do. You cannot put the spurti of a 16-year-old into him.
Absolutely. Absolutely. So in a nutshell, credit is essential for economic growth, but credit without financial discipline can quickly become a trap, and borrowers must know their rights. Lenders must respect the law, and regulators must ensure that recovery never crosses the line into harassment, because in the end, a healthy credit ecosystem depends not just on lending money but on protecting trust. With that, it's a wrap. Thank you so much, all three of you, for joining and helping our viewers understand this matter really well. Thank you so much, all of you. And with that, it's a wrap on The Money Show as well. Thank you so much for watching. Goodbye.